Let's start with knowing what source documents are. It is the support document that is used when recording journal entries for transactions. It is a document that serves as the proof of the transaction. Each time a company is engaged in a financial transaction, some paper trail created are called source documents. Source documents originate the account process and forms an integral part of the accounting system. Purchase order. These are sent by the buyer to the vendor first. They state exactly what the order should contain and when it should arrive. Sales invoice. This is made for account receivables. When an item is sold, the seller will issue a document providing all the details of the sale. Check. This is a bank note that represents the cash that is being paid by the customer. Revenue receipt. This is used to record the receipt of cash. A receipt is proof that the payment has been made, which is a good idea when paying cash. Cash register receipts. This is a business paper that lists the money coming in from customers. Bank advice. They are debit or credit advice. First, bank credit advice is bank documents informing the business of an increase made in the business's bank account. Second, bank debit advice is opposite of bank credit advice. Deposit slips. When one receives check or cash from the customer, the seller will write a bank deposit slip together with the check or cash, which will be taken to the bank and presented. ATM cards. Receipt from the ATM machine as evidence that money was taken from the business bank account, e.g. hairdresser receives ATM receipt when taking cash from the ATM. Bank statement. A bank statement is a summary of financial transactions that occurred at a certain institution during a specific time period. For example, a typical bank statement may show your deposits and withdrawals for a certain month. Cheque stubs. A cheque stub is the part of a check that is kept by the payer with information such as check number, date, and amount. If you accurately record on your cheque stubs what you have paid out, you should build up a very accurate account of your finances. Let's talk about the validity of source document. For source document to be valid, it must contain the following information. A. Name of company issuing the document. B. Name of company receiving the document. C. Date of business relationship. D. Serial number of business document. E. Name of document. For example, local purchase order LPO, receipt. F. Particulars of person issuing the document. G. Particulars of person authoring the document. Importance of source documents. It provides evidence that transaction has occurred. D. During audit, it serves as audit trail. C. It reveals all the basic fact about the transaction. D. It is a good internal control. E. It assists accountants in the preparation of financial statements. F. It is used for reference purpose. G. It is used to correct errors. H. It enable auditor track fraud. You can contact us via our website, www.omiconsulting.com. You can also follow us on Facebook and Twitter.